Welcome to the Tuesday edition of the Not Your Average Investor Show. I'm your host, Pablo Gonzalez, and today we've got a very interesting guest. She is the new director of marketing.
Yes, you don't even know who I am.
Cole Nalzin.
Nope.
Oh, Nalzin. It is a black belt level 5 name to pronounce,
True.
but has come in here, taken the marketing world by storm, and brought with her many cultural references from movies that I thoroughly enjoy partaking in. And we're going to take this opportunity today to talk about why people tend to have a bad opinion on rental income properties. What do you think about that?
I think that I would agree and have some personal stories to share.
She's got some personal stories, folks. GC is unfortunately not here because he got a stomach bug, so he can't be here. And we are flipping the roles today. Today, I'm the expert. Cole is the noble fool, and she gets to ask me her genuine questions as she is learning about JWB to market it. She has her own experience in this world. I think it's going to be super interesting, and it's also going to be her first partaking in a time-old tradition that we call what, Cole?
The roll call.
Roll call, baby! We got our leadoff hitter, John Hennon, kicking us off today. We got the ringmaster, Drew Barnhill. We got the MVP. I know you know who the MVP is. Lee Bishop, the MVP. We got Jeff Pettyjohn from Missouri. Welcome back, Jeff. We got Christopher Lee from Fernandina Beach back in the house. We got the better Greg, the only Greg today, Greg Stone. Howdy from New Jersey, Greg. Good to have you here. We got the Mama Bear checking in, Cody Adams in studio. We got the fairy godmother of the Not Your Average Investor Show community. We were just talking about her and how she makes people's real estate wishes come true. Jen Filson. We got our regulars, Terry and Rosalind Riley from Marietta, California. We regard you. I'm gonna a little bit more, more jazz hands, more vocals, whatever. We got Val Desai from Phoenix checking back in. Welcome back, Val. We've got our favorite name to pronounce around here, Aaron O'Neill. Into the lights, Aaron. You know, everybody was asking me in this room how I come up with all these different nicknames.
We were.
And we'll get into that one of these days. We got Pamela Myers. Pamela, good to have you back in the house. Mark Norman from SoCal. I love SoCal. Cool. We're ready to go. Cool. Your experience with rental properties. Give us a little history of what your exposure has been in your life before coming to JWB about all this stuff.
Yeah. So growing up, my family invested in real estate. So I came to JWB with an idea of what that looked like.
Mm-hmm.
And when I say we invested in real estate, I mean, we went and bought properties. I say we, my dad. I didn't do anything. Let's be fair. I did nothing. As a small child, I looked on as my dad.
You gave him the motivation to buy rental properties.
I did. They went and they bought rental properties. I am from the New York area, so it was, kind of Jersey Shore, and they flipped homes.
Mm-hmm.
And it was laborious. And there were a lot of times where we were, going to check on things and progress and construction. And I have core memories in my childhood about kind of what a pain it was and how much time it took for my parents and all this other stuff. And there was a huge benefit to it. They retired early.
Mm-hmm.
They owned a chiropractic practice that they were able to retire from, and they moved to Florida, and they, we had a great life. So there were clear benefits. But when my husband and I got to the age where we were starting to talk about our retirement strategy, we went the safe millennial route, and we have invested in our 401k religiously from the day we started working.
Yep.
And so we've kind of, as I've started here and I've learned more about what JWB does, I've kind of started to get more curious about other options. So that kind of brings us to our chat here today.
It does bring us to our chat today. And, something that you didn't explicitly say there, but you are essentially like what us in the marketing world call the ideal client persona, the ICP, right? Because you are a working professional, dual income of the demographic that has the income and the desire to do this. You have 4 kids that you want to put through college, right?
I sure do. I am going to be putting kids through college for the next 2 decades.
Okay.
So 4 kids, 1 daughter who's going to go to college in 4 years, and a 2-year-old son. So I'm thinking in my long-term strategy, like these are my prime earning years. These are my husband's prime earning years. Like we have to be really smart about what we do, because as I'm coming out of those prime earning years, I'm still going to have a child going into college
Yeah.
and then on the heels of that wanting to retire. And yes, I am insane.
Is she crazy is what Lee says. TBD. So, okay, cool. So
Yeah.
then let's talk about it. And on top of that, you're also, your social circle is ICPs, right? You live in Nocatee with an affluent neighborhood and people talk about this stuff, right?
Yeah, absolutely. I have a lot of friends in my neighborhood who own rental properties and manage them themselves in the Jacksonville area.
All right.
More the beaches.
More the beaches.
Kind of thinking more Airbnb style as opposed to this kind of investing, but like, I can't wait to talk to them about all this stuff because I think it's right up their alley.
All right. So let's start there. One, you intimated to me that they're generally complaining about it at times. What are the main complaints that you hear? Like, why are people, as the show says, why are people dumping on rental properties? I don't know if that's what I called it.
No, I think that's a little bit more explicit, but we'll go with it. We'll go with it. So, I mean, I think they love the idea of rental properties. They love being a part of the Jacksonville and the beaches community, and they love the income that they're getting kind of on a more relaxed basis because Airbnbs don't rent like a lease, right? So it's a little bit more of a relaxed thing, but it is a social interrupter. Right. So we've got plans on a Saturday and they've got to stop and figure out and turn something over for somebody. And now all of a sudden they can't come hang out with us because they've got to go handle something at their property. I think that's kind of the biggest thing that goes in terms of the things I hear. I do hear about renos a lot. So because we talk about design choices and, fun things like that. So it's like, oh, look at this new flooring I put in at the like that, those kinds of stuff. And so it reinforces my idea of what I grew up with in terms of like this being a job. Like if you invest in real estate, you're signing on for another job. And as a working mom of 4, a crazy working mom of 4, thank you, Lee, I don't have time for another job. Yeah. I'm running around on the weekends for sports. I'm doing all of the things. And I don't have time for that. So I have never actively thought of myself as a potential real estate investor because of that.
Okay. Well, this is the part of the show where we call it Pablo answers why that doesn't have to be that way. We're gonna do multiple of these segments, right? So this first layer of social interrupter, I really like that because I think it sounds way better than passive and active. It's like you can invest in real estate in a social interrupter way, or you can invest in real estate and have your own weekends to do whatever you want way.
Right. Do you want to finish that mimosa girl or do you want to go?
I like that. Right. So I guess what you were describing, first of all, is short-term rentals, right? Which has its own thing. But I think more fundamentally is this idea of passive and active investing. And it sounds like your dad, it sounds like your neighbors, most of the people that you had exposure to before coming to JWB are active investors, which brings with it, the returns are higher for active investors, but you pay the cost of social interruptions.
Yep.
Right. So this idea of that was something that I also had to learn about. Most of my social circle had tried the rental property route at some point, but it was mostly active investing. It was like, I'm going to buy one and I'm going to take care of it. My brother owned a couple of like Section 8 houses in Miami. And I remember he'd like put his little gun in his fanny pack and he'd go over, because it wasn't great neighborhoods. Right. But like this idea that there are ways to do this, hire a professional property manager to do this thing. And therefore the social interruptions are limited depending on the decision that you make with a property manager, I guess is the first thing that people have to overcome. Beyond that, so like if we were to go into other concerns, right? Like you talked about buying a home yourself. Like what are other things that you would associate with having an issue with rental properties?
Yeah, so I mean, as a homeowner myself, like my husband and I have had 4 homes, I think, in the past 17 years or so. And the first home that we bought, our intro home, needed to be entirely like rehabbed, let's say, right? It's a guy in his 90s who designed it in the 70s. Everything was wallpapered. So my first thought is, okay, you're getting a home. Now you've got to kind of rehab everything. You're going to run into maintenance issues. Like what happens when your air conditioner goes out, especially in Florida, like those things, like, and it's an unexpected cost. If it's your primary residence, like, okay, like you've built in a window for those costs. Like, what do I do when something like that happens at a rental property? And that's now like an additional cost that I didn't plan for.
Yeah. So now you're talking about essentially unforeseen maintenance expenses and like unforeseeable things, which is just kind of this was the real sense that I got from my friends, right? Like this idea of like, it's kind of a crapshoot experience, right? Like you can buy a property. If it's your own home, you deal with it. But if you're also buying other people's homes and it's unpredictable what you're going to have to spend on stuff, then it starts to become this like real problem. One of the things that I've learned through hosting the show and being part of the community, but more than anything, got really clear for me when we put together that class, is that I had always heard in real estate investing that you make money on the buy, right? That's like the common nomenclature. Like if you buy right, you're going to be good. But that didn't really match up with this idea of like, but what about maintenance expenses? And what I've learned is that there's two types of numbers. There's the buy numbers and then there's the performance numbers. And I think that in the investing world, in the home buying world, which is largely residential, your own properties or whatever. And, there's a lot of experts that can put together the data for when you buy something, right? Like what is the price of it? What's the price to rent ratio of it? What neighborhood is it in? What rent do I think I'm going to get? Right. Like it's pretty easy. Like what shape is the home in right now? Right. Like the coming in. Yeah. You get a fixed mortgage for 30 years, right? Like those are all numbers that I think are kind of commoditized in the sense that it's like entry level knowing that stuff. But then the thing that actually makes the experience good or bad is the performance numbers, right? So it's like what happens once you own it, predictable is that experience. And when you think that, happiness or joy comes from this idea of like expectations being met and misery comes from like expectations not met, right? It's like, how can you set the expectations for performance numbers? And I think maintenance, when it comes to these things, there is 3 different ways that once you're going the passive route and you go a property management route, there's 3 different ways that people get the performance numbers. And I think all 3 of those lead to very different experience. Would you like to know what they are?
I would.
All right.
So Aaron asked, what does your family think about you investing in rentals now that you work at JWB? And it was one of the first things that I went home and talked to my husband about, because I was like, we think about this and we talk about our retirement all the time now that we are old. And we kind of pitch ideas to each other, and he's super open to it, but we don't know, right? Like that's kind of part of my learning experience here is from an investor standpoint, like what does that really look like? So when you talk about like the 3 ways, it's like, that's kind of the meat of what I need to understand, because for, what I consider to be like, I'm an average person, I'm, a working mom average.
Yep.
How do I become not your average? You like that little?
I do like that. Yeah.
That wasn't purposeful, but it worked.
Yeah. So
thank you, Lee.
So are these conversations then like you've gone home to your husband and be like, we should look at this? Like, was that kind of when it first started, or had y'all had those conversations before?
So it's funny because right before we had our 4th, and he was a surprise blessing, we will call him, we were talking about, because my next youngest was going into kindergarten. And so that was the first time in 12 years that we did not have a daycare payment, which I don't know if anybody is familiar, but a daycare payment is a mortgage payment. Like that is, something significant. So we are now talking about, well, we can invest that someplace else. And we actually talked about doing what my family did.
Okay. Flipping. Buying
a property, improving it, and then kind of doing more of a rental scenario. And then we had Milo, and that we were like, never mind, back to daycare. Yeah, but so that's the only conversation we had really had up until this point. And we had really only thought of it from that possibility, right? Like the way you invest in real estate is to buy a property and to manage
Fix
that
it in
property,
yourself,
right?
manage
Like
it yourself,
that was
yeah.
the only, so I think being here has opened up that conversation into different paths because now I understand, at least at the most basic level, that there are options.
Yeah, there's options where you don't have to have like a plumber, 3 plumbers in your phone and 2 painters in your phone and a drywall person and a do-it-all handyman and
Yes.
a roofer, right? I'm
Right.
starting to, it's funny because now I've only bought through JWB, and now that I got this duplex and I have
Yep.
tenants next door, residents next door, even though I'm turning it over to JWB, the experience is becoming much more real because I'm a homeowner too now, right? So it's like
Yeah.
these little fix-it-all things. I'm like calling around people to like, hey, you guys got like a do-it-all handyman? Because I got like a toilet that doesn't work. I got this like one thing over here on the wall that's bothering me, and these tiles are loose. What's up with these tiles, right?
Yeah. And I'm not gonna lie, like my husband and I are very hands-on, and
Yeah.
I promise you that the second I said to him, let's buy a rental property, he was like, great, now I am a do-it-all handyman.
Yeah.
Like
Okay.
100%, because most of the time, like we try and fix something ourselves first
Yeah.
before bringing
Yeah.
somebody else in. So I'm sure that that would be a detractor for him in wanting to move forward with that because he knows that there's going to be responsibility for him tied to that. And
Sure.
so when I talk to him about JWB, like I'm lightening that load for him.
Yeah, that makes sense. That makes sense. So once you get into that process, if you decide to like look into it and then they, you convince him that it's passive, he's not going to have to
Mhm.
be the do-it-all handyman.
Right.
And they're going to put these numbers in front of you and he's going to look at performance over 10 years. If he looks at, yeah, but how can I trust that that's all that's going to cost on month 4 of year 3, right?
Yep.
Now you can use this language. You ready?
Ready.
So
All right. I'm done.
so 3 different ways that you get these performance numbers in general, right? All performance numbers. There is the industry standard. So it's like, what does the magazine tell me that it should be? What does the textbook tell me it should be? What is placeholder
Yep.
of whatever, right? Those are not very precise because there is no like one real estate industry and there's no, there isn't standardization across the industry. Then there is the bought data, right? So you can like hire like John Burns Real Estate to find out more specific data for your market. You can go networking out and talk to maybe 3 or 4 other home flippers, ask them their numbers, or, property managers, ask them their numbers and like, be like, okay, cool. If they're all saying this, I can average it out to this. And that becomes more specific. Or there is proprietary data, right? There's the, don't you worry, kiddo, I've done this 6,000 times.
Yep.
And this are my averages. This is what it looks like. And then depending on how well you keep that data, you can start to you're a marketer, right? Like you can start to segment and you can start to really, really understand it. So,
right. And I should share, I'm a marketer and my husband's a data engineer.
Oh boy.
So we are very data-driven people. The way we selected our kids' names was through a shared Google spreadsheet and an algorithm. Not
Really?
kidding.
An algorithm?
Yeah. So the data piece for sure is something that's really important to both of us.
Yeah, interesting. All right, cool. Well, I'd be interested what your husband says about JWB's data flywheel, right? Because it's this idea that you can hire consultants, but at the end of the day, if it's performance, right? Like if I'm going to ask you how fast can I run a mile, you're going to like look at me, look at my body type and be like, probably about 10 minutes, bro. And, or if I ask you how fast you can run a mile because you're a runner, you can be like,
I know what my mile is.
7:32.
I think I could beat you in a foot race.
Yeah, I would not be surprised, right? But like this idea of like learned data of exactly what you can benchmark against yourself is like super, super valuable. And that is the thing that JWB has created since they have been in business for 17 years, have done it now for 6,000 properties, and they continue to add that thing and it becomes this like compounding advantage piece, right?
Yeah.
So
I think what I love about that particularly is just like the depth and breadth of data specific to Jacksonville, right? Because I'm somebody who's going to go and Google. And so is my husband, and we're going to find all of those Burns real estate type things, and we're going to do our due diligence on anything that we do.
True.
But, that like true understanding of a particular market, I think it really resonates with me from a credibility standpoint.
Yep. And I would even go a step further that it isn't just Jacksonville. It is these very specific workforce housing neighborhoods that
Yep.
surround the urban core, that they've completely normalized their data around to understand the difference between the maintenance rate of a new build and a remodel, the life expectancy of the critical elements that they put in, right? Because they standardize to a certain level before they like sell it. And, how long tenants actually stay in that asset class, right? Like there is a difference between how long somebody stays in Airbnb versus a long-term rental, but there's also a difference between how long somebody stays in a beachfront property that like a luxury rental versus a workforce housing rental versus with a landlord that they really admire and respect versus a landlord that they're just like, man, this person doesn't even pick up the phone, right? Yeah. So like all of that stuff has infinite variability and they're able to do that. So with that regard, there's also the data around what are the materials that you can put into the home that reduce maintenance long run, and that makes a big difference as well. Can you guess what that is?
All right. Let's see.
Yeah.
Let's see if I've got kid knowledge of this because my kids destroy everything.
Okay.
So the first thing I did when I moved into my new house was do paint that you could wipe down versus the paint that just pulls everything, paint, right? Easily scrubbable paint. Flooring choice, I would definitely guess is a big one. I have not found an indestructible flooring choice, so I would be completely open to understanding what that one is because.
Yeah. You want to know?
Yeah, I want to know.
So with flooring, there is a certain durability component, but as you've learned, it's not going to withstand destroyer kids, right? So the thing about flooring is that it's important to get flooring that is easy to replace without having to replace the whole thing. Right. So people might think, oh, carpet's cheaper. You're not going to mess up carpet that bad. But at the end of the day, if you ruin one part of the carpet, you got to replace the whole carpet. Whereas if you put in these modular things, when like one part is ruined, you can just replace that one part, not the entire room. So that makes sense. That's flooring. Okay. What else you got?
I mean, I've got some crazy stories. My son once hung from the curtains and pulled the full thing out of the wall for drywall. So
okay. I don't know about that. I don't know if there is a chimpanzee proof.
You want to talk about crazy tenants?
Yeah.
Kids will do it. So
do you think about how easy it is to clean things in order for them not to go bad, right?
Yeah, I mean, that kind of goes back to the paint thing, right? Like I'm thinking walls, but it's really all surfaces, right? Like every surface needs to be wipeable.
Exactly. So easy to maintain, easy to reach, things that don't have a lot of seams in the middle that can grow dirt, right? Like standard practices of durability and ease of maintenance and ease of replaceability. Or it's kind of like the triumvirate that they look for when it comes to surfaces.
Yeah.
And that reduces maintenance and reduces maintenance expense throughout, right? The other thing is these numbers become normalized over time, right? So, but if somebody's telling you, oh, don't worry about it, that's happening right now in year 1.5, it's going to be fine. Like it's not going to give you the warm and fuzzies unless somebody can be like, because we have done this so many times, right? Like if you're like, oh man, I just had this problem, like, yeah, but the book says doesn't feel as good, right? But if it's like, yeah, you know what, this is how it's going to end up performing, and if it doesn't, we'll see about fixing that. It's like a totally different experience as well. Coming from me, who has had some issues already, right? Like I've had I had an eviction post-COVID that ended up being, ended up being one of these things where like we had to have some elevated costs. But at the end of the day, I'm like, okay, cool. They were able to rationalize, okay, so these elevated costs happen because this person was in before we managed it. The next person that we replace it is going to be better screened. And the materials that we're going to put in for this are not going to have the same exact symptoms, right? So what do you like? Somebody putting something in the chat?
The comments.
Somebody putting something in the chat?
Now he's calling me out.
Yeah, Lee likes to do this. Lee likes to send private messages to us to like divert our attention. Like he used to make fun of my eyebrows whenever like if I type, I start going like this. And yeah.
Well, full disclosure, Pablo and I were both talking about the funny faces that we make before we started. So we were just kind of, we were doing our.
So you were also telling me something about your monthly payment. You want to talk about that again?
Yeah. So, I mean, I think like it kind of ties back to all of the costs, right? Like I'm managing a world, right? Like I've got costs that are going to my own home. I've got costs that are going to our retirement. I've got, just standard of living costs. And then, how does someone plan on a month-to-month basis to make sure that, like, let's say my house stays vacant for 3 months or there's an unexpected maintenance cost. Like, how does someone make sure that they don't wind up underwater on something that is supposed to help them long run? Because I understand from listening to everything that you guys have talked about that, it's a long-term investment and those are the things you kind of have to wait for. But like, how do you make sure you get to that point without winding up in a bad situation?
Definitely. So the first thing is, again, with proprietary numbers, are when you go to hire a property manager because you want a non-social killer experience, right? Asking them, do they know their average length of stay, right? So like number one is asking to see if they have that data, because from my understanding is not a lot of property management companies even track that number, because many property management companies are like optimized to just like turn and burn tenants and get people in every year, right? So it's just like a matter of like, no, I get to fill it, but like they're not thinking about how long they're going to stay, right? So the idea of average length of stay here at JWB, I think is like 4.5 years, because they sign a minimum of 2 to 3 year leases when people first show up, right? So this idea of the name of the game and doing well is, to your point, having it occupied, right? Like not having an empty home, so somebody is paying my mortgage as often as possible throughout the 30 years that I own this thing, right? So this idea of trying to sign long-term leases and making sure that they're doing it. The other thing that JWB does, apart from tracking it, is treating renewals as a thing, right? Like this idea of 6 months prior, they've first of all, throughout the length of the stay, they have this like relationship building strategy in place with the residents so that they're not strangers that only shows up when something's wrong, right? I remember, it's funny. Did you watch the show with Alex's mom last week?
I only caught part of it.
Not a trick question.
Yeah.
She was I was working. She was talking about, from the investor standpoint, that at first she used to get anxiety when the phone call rang from JWB, because she was like, "Oh my God, if they're calling, something's wrong. It means I'm out $1,000."
I would be 100% like that.
Right.
Yeah.
So
also because just someone's calling me and that just triggers my
very
anxiety.
millennial of you. So they changed the way that they reach out to investors to just have regular checkpoints, right? Like call you regularly to be like, "Hey, how you doing? Everything good? Super. I was just telling you that your rent is paid on time." So it wasn't just like, "Hey, toilet's broken," right? Or a tree fell on someone's roof. So they changed that, and they've also realized that works on the tenant side, on the resident side. This idea that having proactive communications with them so that you don't have a negative association with that relationship is big, right? So then they treat these like renewal opportunities as it's like sales training, right? It's just like, how do you increase the lifetime value of the client by, creating these opportunities to continue to stay there. So they're heavily focused on that. And the key differentiator is most property management companies make the majority of their revenue when they turn a tenant, right? Because most property management companies, JWB included, when they place a new tenant, they keep the first month's rent, right? Like that is the tenant placement fee. Because JWB's revenue model is made to make money when you're doing well, it's when you're investing in the next property. So they're not trying to maximize their tenant placement fees, they're maximize length of stay. So you're like, "Oh, this is a good experience, I want more," right?
Yeah. So what's funny is I'm going to put my marketing hat on for a second. I actually this week was just working with the property management team for a new piece for the residents about understanding the true costs of moving.
Okay.
And why renewing your lease makes more sense, because there are a lot of hidden costs with moving that you don't think about, and they add up. And it actually averages to about, $4,200 for a move, even a local move where you're not factoring in mileage for U-Hauls, just based on all of those little things.
Wow.
So actively working on the.
Interesting. So you're
Then you
working,
just
you're
mentioned
working on
that.
that sales piece with
Yes.
marketing air cover.
Yeah.
I like that.
Yeah.
$4,200 without counting psychological damage.
Yeah, no kidding.
That's the worst. Moving is the worst.
It is.
Interesting. That's really, really cool. So that's cool. That makes me think of today's Tuesday morning meeting of how there's, all this like cross department collaboration here. And the fact that you being here has now allowed for marketing to be something that isn't just Pablo being funny on a show and us trying to sell homes, but they're putting like the whole power of marketing into like all these other departments.
Yeah.
That's
We're
really
really
cool.
working on integrating and just kind of adding value across all of the solutions and just trying
I
to
love that.
elevate a little bit across the board.
If I hear $4,200 to move or $100 extra bucks a month, I'm thinking $100 extra bucks a month.
Right. And that's the thing, is that you don't necessarily think that because you're just looking, apples to apples, but you're not. It's apples to oranges, and you don't even realize it until after you've moved and you spent all this extra money.
I love that. That's so smart.
And by the way, that's without professional movers too. Like we assumed in the workforce housing that most people would rent a U-Haul, like, if you factor other costs in, it gets even bigger.
Man, $4,200. That's crazy.
Yep.
Yeah. Okay, cool. That's awesome. What else?
So I mean, I can just like, if I'm thinking about all my concerns, I'm going to put all my,
put them all out there. Put them all out there. Bring it on.
anxiety on the table.
Yeah. I want you to hate on rental properties. Hate them. Yeah.
I am going to just like, we bought 2 years ago. Thank everything in the world that we bought before all of the interest rates started to rise, but we have a fixed mortgage, but our escrow payment has gone up twice in 2 years because our property taxes went up, probably our insurance went up because we live in Florida, like all of those things. And I think when you go into it, you're thinking to yourself, like, I have a fixed mortgage. This is my monthly payment. And you plan for that. And, that's where you are. And you don't really necessarily think like that's going to continue to go up. If you're in a position where you own 6 properties and only one is your primary residence and they all go up at that, all the property values are increasing. Like, does it get to a point where it's too much, or does it end up paying for itself? Like, how does that all work, and how do you predict that?
Yeah, good question, Aguado. So this is something that we've actually talked about recently on the show, right? Is this idea that property taxes have gone up because property values go up. In the past, insurance has been going a little bit crazy because there was this there was a glitch in the matrix, right? Like these roofers figured out a loophole that paired with these attorneys, and they figured out a way to get insurance people to just buy people's new roofs willy-nilly, and people started abusing it. But we had a group, including Whitney Ritchie, that went over to Tallahassee to do a little lobbying, and they got that fixed, right? So going forward, that stuff is not going to continue to skyrocket the same way, because the giant loophole that was just basically killing insurance companies has been plugged, right? So more normal insurance is going up. The other piece of it, this idea of property taxes. So when you are looking at your buy numbers on property taxes, the property taxes are estimated to the previous value of the property. So as you can imagine, Jacksonville, high growth market, property values go up. If you don't understand that you need to price it to the future value of the home, then when your mortgage goes to escrow, they're going to ask you for less than what they actually are going to need in order to cover those taxes with the mortgage. And that's actually a pretty common thing that happens with inexperienced buyers. With JWB investors, it happens every once in a while, but it doesn't happen to the same level because they're used to selling the house next door already because they've got 6,000. So they know the current property tax value. They've sold houses in that neighborhood, and they work with the same mortgage providers over and over that they really, really trust. It's like this tight little group of super mortgage providers that understand this deal better than everybody else, right? It's like one of the reasons that they only work with these selected ones. So what ends up happening if they underestimate it on the front end and it goes up on the back end for a certain amount of time, that only happens for a certain period of time, because the delta, the difference in what they actually need, is never going to be so big that it doesn't, that it lasts for too long. And eventually the numbers even out, right? Like once you get to that 10-year timeline, all that stuff's going to even out. The return's going to be right. And it's just going to be like a short time period. And in the front end, if the mortgage company didn't do it right, you're making extra money on the front end, right? So
then that gets returned.
So it gets returned. Yeah, correct.
Okay.
Yeah, buddy. Good questions, Cole. Anybody, I would love to hear from the community. I know that, it was Michael Santorios at the summit that said, at the end of every webinar, something pops up that says, what's stopping you from getting a rental property, or what's stopping your friends from investing in rental properties?
Yeah.
And he's like, what's the answer to those questions? And I said, I don't know.
Let's talk about
it. I forgot about that was happening. And I honestly haven't figured out how to find Zoom to tell me those answers that people are putting in, even though we're furiously looking into it. So I'd love to know from our community, is there something that what is stopping your friends from renting it for rental properties? One of the things that I think when we were just kind of like talking about what we're going to talk about on the show as we wait for our community to dutifully chime in is you said some people don't realize that you brought up private lending as an option when I hadn't even thought about that. You want to tell me about that?
Yeah. So, I mean, when we were chatting about what we were going to talk about and kind of figuring out what my thoughts were initially, private lending is obviously something that JWB does as well. But when we talk about turnkey and we talk about private lending, we typically talk about it separately as opposed to talking about all of the different ways that you can invest. And again, coming from a background where I thought there was only one way to invest in real estate, it's interesting to not just hear about the turnkey side, but also understand that there's more ways to kind of closer and safely invest, like in terms of how I think of it, like a 401k, right? Like, oh, I'm putting money aside and money comes back to me, and it's just more comfortable maybe for somebody who's a little bit more risk averse. And I think it's really cool that you can do one thing, you can do both things, you can kind of layer things. And so I thought that was kind of an interesting piece to talk about as well.
I think that is interesting. And honestly, I'm kind of upset at myself that I didn't think about that, because my first investment was private lending, right? Like I'm
better at this than he is.
Better. This is why you're the director of marketing and I'm the monkey on the show. So yeah, I agree. I think this idea of if you want to get exposed to this asset class and you don't have, Leah's saying that he talks to younger people and they're saying that they don't have enough for the down payment. You can private lend for less than that and let that thing accumulate interest at a higher rate than what you would get in the bank account or something like that. And just let that compound until you get there. All right. To Lee's point of young people not having enough for a down payment, we are going to be doing a lot more content on creative ways of coming up for this. Namely, this idea that we talk about investing in retirement and outside of retirement funds, right? We've talked about that with Jason DeBono in non-recourse loans, but there also is this idea that, man, maybe you have what you were going to have for a private lending loan, but you don't have enough for a down payment. But there is a way to get a loan from your 401k to invest in a rental property outside of your 401k. And if you match that 401k loan with what you were going to put into private lending, now you have enough for a down payment. Now you get that flywheel going of real estate that ends up, the 5 profit centers compounding over time and gets you in the game as well, while paying yourself back into the 401k too.
Yeah. And I think that's really cool. And being here, that's the first time I had ever heard anything like that. And I have sat through an HR seminar on 401k investments literally once a year for the past 20 years. Right. So they always bring somebody in. It's always, all what you can do with your 401k. And nobody has ever mentioned the ability to diversify into an asset class that has a potentially better return.
Yeah. Yeah. Let's talk about that. I remember, I haven't worked big company in a long time, but I remember when they first gave me the primer on my 401k, people were like, yeah, you can do this and you can do this and you can do this and you can get a loan, but you never want to get a loan. That's crazy.
Yeah, nope.
Like,
do it.
Not only do they not teach it to you, they de-incentivize you to do that, right?
Yeah.
Like they're just like, that's nuts. You don't want to do that. And it isn't until you meet real estate investors that have done this. I remember the first guy that I met was this guy, Doug Orr, who was on the show season 1. He was a assembly line factory worker in a Honda factory in Indianapolis, in Indiana, outside of Indianapolis. Read Rich Dad Poor Dad, took a 401k loan to buy a rental property in his area, went the active route, did it himself. And now 6 years later, the guy has like 103 doors. He is definitely not a factory worker anymore. Like I call him the American dream, right?
Yeah.
Like it's like he really exemplifies his American dream of like sourcing capital, putting it to work for you in real estate, getting his way out of this like, you know, the assembly line factory worker life into now he's a full-time real estate investor.
Literally went from rise and grind.
Yeah.
To
100%. Yeah. He's a big hero of mine.
Yeah, that's awesome.
Super cool guy too. Reminds me of Chris Farley. It's really, really funny guy. So what else we got in here? For older folks, it's tough to get a down payment. Leah's saying that these days young people are paying as much as 40% of their total income for mortgage. That's another thing I would like to touch on. I think this idea, I talk to those people because they live in Miami, right? It's interesting to note that when you're from the Northeast like you are, or you're from South Florida like I am, it's so easy to think, oh, real estate prices in my backyard are what real estate prices are, when there is cities like Jacksonville that are still below the median price of real estate, and you can buy something here for way less than what you thought you can get in your own backyard. But you need to have that example of, oh, you can do this passively. You can rely on a professional property management company. You can trust their numbers because they're proprietary. And okay, now I'm willing to invest 3,000 miles away, 400 miles away, stuff like that.
Yeah. I mean, at the end of the day, it's access to education and data so that you can make the right choices. And I mean, I have felt, at least in my career, that it has been like, these are the right choices, and it's a very narrow path.
Yep.
And then, you know, maybe you branch out into stocks or something like that, but like the path is pretty narrow to get from point A to point B. And I think that, you know, what being here has made me see is that there are branches to that path that you could take.
True. That's awesome. I mean, it really is the thing. I don't know if I hadn't done private lending and then pulled out early because I thought it was something different than it was, and then wish that I had stayed, not just wish I had stayed, but wish I had at that point actually bought the rental property instead of just doing private lending, and wasn't somebody trying to solve my own problem by creating this community full of people that I can get advice from, right? And like
you're all being used.
An educational program, right? Like, no, it's the whole like founder solving their own problem. Right? It's a powerful thing, right? So I think the education piece, the community piece, the positive cognitive bias that you get by seeing person after person giving the same story of like, no, this is how I did it too. It's not crazy just because your mom and dad think it's crazy. Yeah, is a super powerful thing. Yeah.
It's just because they didn't know better. And I mean, I think that is something that we can all just keep learning. And, you know, that's the spirit of which I come into the investment world here is, you know, what don't I know? And how do I find it out? And then how do I make it better for my kids?
Yeah, I love that. Have you read Rich Dad Poor Dad yet?
I have not.
I'll let you know that this community peer pressured me for at least 9 to 10 months before I read it.
Okay.
You should do it sooner.
Rich Dad Poor Dad.
Yeah, you should.
I have a to be read pile on my nightstand about this yay high, and I will add it to the stack.
Well, if Jen Filson and Lee Bishop have anything to say about it, it's going to go to the top. And
send me all your recommendations. I am an avid reader. I told Pablo this at the beginning of the year. One of my goals this year is to read 100 books. 94 was last year. So I was so close. So get me over the limit there.
I love it. Any notable books you've read in the last year out of these like 94 books? Like, what's the most recent book that you've actually taken action on that's moved the needle for you?
Man, you're gonna have me do business books now.
Yeah, please.
And I don't know that I read that many business books.
Okay, you're doing a lot of like fiction books.
Yeah, I like murdery books. And I like historical fiction. So
cool.
But no, the community book that you gave me was the last one I read. So
you already read that thing, huh?
Yeah, I already read that thing.
Super impressive.
You know how many books you have to read a week to get to 100 books a year? Do the math.
I'm going to guess a little bit under 2. Just simple math.
Yeah. There you go.
Nice. Nice. I'm a numbers person now.
Yeah.
Just so everybody knows.
Watch out, Gregg.
Last question. So what I got to do to get you a rental property, Cole?
No, is that really?
No, I'm just kidding. I'm just kidding. Unless you want to call your shot right now. Okay. Well, this Thursday, we are back with a guest investor. We've got the man of steel, Vincent. You guys want to know where the nicknames come from?
Yeah. Why is he Superman?
Vincent Barbarite is the newest nickname that I've come up with because we were at the summit. He was telling me that he's got a steel, like his family has like a steel working company. And I was like, Man of Steel. Man of Steel.
Yeah.
So I'm pretty proud of that one. I'm
That's
not
a
going to
good
lie,
one.
because I like these ones that are just like, you know, make you feel good about yourself and stuff like that, and have like a quirky explanation to it. So
Yeah.
that's her latest nickname. I was talking to him earlier this week. He's like, hey man, you know, like I've done a lot of commercial investment. Is that a problem to talk about? I was like, no, talk about it, right? Like we're going to talk about this idea that he's done a lot of commercial investing. He's thinking about single family homes. He's done a couple things here. I think he's got some stuff with JWB. So he'll be joining Gregg live on Thursday as a guest investor. And I want to thank the community for showing up. Without the community, we don't have nearly as many things to bounce off of each other at. This would have been like a 15-minute conversation between me and Cole. So.
Yeah, I can't talk to Pablo that long.
Can't talk that long. Every time we try, it just doesn't work like that unless the community's here. So thank you.
Do you want to just do 5 minutes of uninterrupted eye contact?
No.
No,
I definitely don't. It doesn't work for podcasts. FYI. So I want to thank you for taking, you know, an hour out of your day, like you always do on Tuesdays and Thursdays, to be here. It really makes a big difference. Denny Davies, late arrival, mystery man. We call him the mystery man. I'll start explaining nicknames.
Yeah, why?
Call him the mystery man because he's got a job title that's really, really important and we can't disclose it. So he's the mystery man. That's why.
Okay.
But he's also the #1 attendee of the show over the last year. Lee does have a Q&A. All right. Lee says, Cole, I love that you were exposed to real estate investing at a young age. Jane and I are jealous that we got into the game at a late age. My question is, how are you looking for homes in the area?
So I am obsessive on realtor.com. I think that even when whether I'm looking for a home or not looking for a home, I'm like looking at homes in Tennessee. I'm looking at homes like pretty much I Google what's the next big area. And then I spend an inordinate amount of time looking at homes online.
Interesting.
Yeah.
Did you ever see that Saturday Night Live skit about like Zillow as like a late night entertainment for millennials?
Yes, that's me.
Like they talk about it. It was like
Yes, Jen.
Yeah. It was.
I do house and I do murder.
Yeah. It was exactly that. It was house porn.
Yeah.
So like it was the guy from Schitt's Creek that we were just talking about, like looking through this, like, ooh, this one's got a shower. You know, like having all this. It's really, really funny. I'll send it to you.
Yes. Yeah. That is me. I've got it all under wraps.
Look at that.
I love you too.
We love you coming in. Lee, I'm sorry that I overlooked your question earlier. Thank you for bringing that attention to me.
He told me he was going to do that purposefully to you, Lee.
That's not true, Lee. That's not true at all. That being said, the Rileys are saying another great show, Pablo and Cole. Thank you. Thank you for being here. We don't take it for granted. This community is what makes this place great. We will see you on Thursday back with GC. Hopefully he's feeling a little better. If you got some time, just send him some good vibes so it heals his tummy. And from now till then, Cole, you got any advice for people until Thursday?
Oh, what could it be? What could it be?
Don't
be average.